Hello, everybody. Jim Malone here, coming to you live on Dallas trading floor. It was interesting day today. Very, very volatile, up and down and out and in. And boy, I tell you what, tough market to trade. Basically, as you know, I'm mostly short. I did get finally a fill on my Shopify short. And basically, the only thing I'm long right now is Chevron. So kind of an interesting deal. Let's take a look at the short that I put on today. This is a little slideshow here that we've got. Let's see. Let's add that. Okay, come on. Having a little bit of a bandwidth issue. For some reason, we're not getting as much bandwidth as we need, but it's always a problem. Here's what I did today on Shopify. Basically, what we did is we did put in a bear put spread on it, and the closing price today was 353.51. And here's what we did: it cost basically $400 out of the pocket. What we did here is we bought a July 15th 315 call, and two of those, and then we simultaneously sold the 310 call. So the spread's pretty tight. It's $5. Now you say, well, Jim, why would you do that? Because the price, it closed above. It closed above your top put, your 315 put. Well, let me just show you this why. And I'm going to show you SHOP is, of course, the symbol on this one. So let's go over here. Hopefully it will get the, there we go. Come on. There we go. It's Shopify. There we go. All right. So basically what we have going on here is that, add that to the stream. There we go. All right. Well, come on. boy, that's slow today. Oh, goodness gracious. Let's see if we can add this one. There we go. Okay. So, let's see if I can get this camera working right. There we go. Finally see the top of my head there. So here's what's going on. Shopify rallied today up to that 10-day line, and it rallied quite a bit. It rallied 10%. So we did short it as it rallied. Hopefully I'm right on this one. May not be, because after hours it did continue to move up. But I'm kind of confident that based on what I'm seeing, that it will continue to move lower. And if it does, that's it will give us this kind of form, and then hopefully it will move down. And as it moves down, now it does have to fall from its price about 7% before we'll make all the money. But the way this trade works is it's a $410 trade, and then it has a potential of making $690 if it stays below 310. So, we'll see if that indeed happens. $310, it has to be below that. So hopefully it will be, and if it is, then we'll be in pretty good shape, I think, on this particular trade here. So have a little bit of an issue on my feed here for YouTube right now. Little bit compromised, but let's go on the slides and just take a look, and just with my voice. So hopefully that will work better. All right. So I want to talk to you a little bit about the bulls and bears here. What this is basically we've got the writers, the financial writers that are bullish, and the financial writers that are bearish. It looks as if the bears are outtaking the bulls right now, 40% to 27%. Why is that significant? Well, typically in most markets, when the bears are in control, that's when we're nearing the bottom of the market, believe it or not, because most of the writers are fundamentally bullish. So, but I don't know if that's going to take place this time, just because of everything that's going on in the market. Here's what I do have for you. I did close the Disney short yesterday, and we had a nice little profit on it, about $350. Not a whole lot. But the Boeing, we're still open on the Boeing trade. That was up about $490 so far. We have a potential, I think, on that one of about right around 590 or something like that. So we're getting close to the limit on that one. Let me just check over here on that one to see. Okay, let's see if I can move over to that trade. Well, I'm telling you, I'm having some bandwidth issues here. So we can move over to that. Oops, there we go. Well, maybe there we go. So let's see if we can look at the Boeing trade. Okay. Come on, baby. Taking a second for it to refresh. There we go. Okay, so currently we are approximately, and this is a very approximate thing, we're at about 490 on this one. That's what it's looking like on this particular trade if we were to close it now. But we probably won't close it. We'll probably keep it open just because, it's going the right direction. It's all green, so that's looking fairly good. Okay. On the Salesforce, on the Salesforce stream, let's see if we can get that. Come on. There we go. On the Salesforce stream, we opened that one on the 2nd, just a few days ago, about a week ago, and we're doing pretty good on that one. But let's kind of see what the computer says the value of that one is currently. I'm estimating at about $73, but we will see. Let's see. Get a refresh there. Taking a second for it to refresh, and hopefully we'll get this up. And by the way, I'm showing this on, there we go, $73. So I'm actually showing this, simulcasting this on, okay, there we go, on YouTube. Yeah, so basically we're right here at about 73 on this particular spread. So that's looking pretty good. That's a nice little spread. That is a bull put spread. I mean, a bear put spread with a 185, 180 put. That's on the July 15th expiry. So we're doing pretty good on that one as well. So let's kind of come back here to the, let's see, to the report. Now, Netflix, we've been on that one since the 9th, so just a few days on that one. And that one it popped up a little bit. We had a little bit of a bounce on Netflix. So that is a little bit, that's in the negative territory for the first time here. Well, just barely. Yeah, just barely, as you can see. Let's pull it back up here. There we go. And you can see that, we are just about $17. So I do expect that we will see further deterioration of, further deterioration of Netflix. And of course, that one should go positive as well. Let's see. And we have the Invesco QQQ bear put spread. And that one, let's just check in with that one and see how that's doing in real time. Let's go over here. And I think that one's up too. The whole market, essentially, it's bouncing around, but it's definitely headed lower. That's why, 64. So that's definitely kind of where we're at in terms of that. So let's take a look at that one real quick. Yeah, there we go. Okay. And that's right about 64. That's sort of the, that's sort of the how it lines out there. So basically, we're doing pretty good on those bear trades. I probably am going to have an update for you on the bear trades. Tomorrow, there looks like we may be doing one on Tesla. I have to look at that tonight, to kind of see what where that one's going tonight. But that's kind of how I see it. Now, I did enter this new trade today, and of course, that's the Shopify trade, and I was showing you a little bit about on that. We did. You always want to short as it's moving higher on some of these on some of these trades. As it's moving up, and that's kind of where you want to short it. So hopefully we'll be moving down. We need to move it down about 7% on the price on Shopify to get to, to get to the price that we want to be at to make all the money on this trade. This one has a potential of making about $590. Kind of a nice little trade. Basically, risk is 410 on this one. So hopefully we'll see some nice stuff there. So without further ado, thanks for holding on. Thanks for looking at my stuff. Now, hopefully I can get this thing. There we go. Okay, there we're back. All right, so now we should be up and running. And let's get some comments up there. Boy, I tell you, I am having some bandwidth issues here. So I apologize for some of this lag on this video. So I don't, yeah, there we go. Okay, Jay, thank you very much. Let's see if it pulls up. There we go. I re-entered Dollar Tree at 157. Do you think it's going to go higher? Well, right now, again, I'm a little bit bearish right now on the market. And I tend to be kind of taking a more conservative viewpoint. And so I'm really not moving that much long. But if you wanted to get into anything, that's probably one of the best ones would be Dollar Tree, because it is showing some very good action. And I was in Dollar Tree, and I've been out. So let me pull up the chart for Dollar Tree. That's DLTR. All right. Hopefully we're good now. I'm just sometimes I get these issues at about this time of day where I don't have enough bandwidth and I can't pull up the charts because there's like, yeah. Hopefully in a second we'll get this thing to we'll hopefully get some more bandwidth here. Okay, boy. And of course, I'm lagging on my video as well. Okay, boy, goodness gracious. It's slow. DLTR. All right. DLTR, Dollar Tree. And hopefully we'll come up here in just a sec. There we go. So, there we go, Dollar Tree. Finally got it up. Woo! I tell you, did we get a bounce today? Well, we did. We did get a bounce, but and I think we may get some support at the 50-day line. So hopefully this is a bounce. I don't know though. I'd be a little bit concerned. Now, one thing I do like about this is, first of all, it's a great chart in this market. It's one of the best charts out there. So that's a good thing. The relative strength line. This little blue line here, is pointing upward. That's a very good sign. So I think you should be okay here. I think we'll get a reversal. I hope we will. And, hopefully we'll get a reversal at this level. That would make sense because, it would make sense that we would get a reversal at this level because it is a major index. It's the 50-day line. So hopefully I can open this panel here. Yeah, there we go. Okay. And let's take a look at where that 50-day is. The 50-day is currently at 159.53. So we're just shy of that. We're right on that. Basically, at 159.58 is where the 50-day line is. We're at 159.19. So we're right at the 50-day line. If it's going to bounce, it's going to bounce at that line more than likely. So you probably should be pretty good there. You probably should be pretty good at that line going forward. So I hope I hope that'll definitely do the trick there. Let's take some questions from TikTok. Let's see if it will let me. We try again. There we go. All right. So let's see. More likes. Okay. Okay. Notifying viewers. Thank you very much for notifying. I appreciate it. You are okay here. Okay, great. All right. So let's take a look at two stocks here, NOMD and Affirm. Boy, I don't know if Affirm is going to be doing that good, but let's take a look at it anyways. And hopefully I can get a window here. See if it'll let me. AFRM. Okay. Affirm. Is it affirming anything? No. Boy, I tell you, I hope you're not in this one too heavy. This is just a terrible chart. No offense, But this is just a terrible chart. And I mean, it looks like it's gotten some kind of dead cat bounce here. I don't know why it's turning up at this level. Interesting that it is. We definitely have something happening after hours. I don't know exactly what's happening. Probably a short squeeze. So, that's legitimate too. So it does look like there is a short squeeze happening on the firm. There's an awful lot of buying coming in. Let's look at the 10-minute chart to see kind of what happened there. I can't really tell because this is an after hours thing, but it does appear that there is some unwinding of a position. And I would either there's either an acquisition going on, or probably more than likely there is a potential short squeeze here. I think that's probably what's driving this price is a short squeeze. All right, let's look at MOMD. No MD. I don't know that stock. Right, hopefully we can. NOMD. All right, let's pull that. And there we go. Nomad Foods. Well, that one definitely made a move. Again, I don't know what is going on with Nomad Foods, but boy, I tell you, I like that. I like the volume action on this. There's definitely quite a bit of buying action going on here. This could be, but what I'm afraid of here, and this is what I'm afraid of in all these stocks, is that yes, I mean, it looks as if it comes down and then it rallies to that 50-day line, and then it looks like it goes down. So this actually might be a short, to be honest with you. It's got it's packaged foods 29 out of 197, but the thing I'm looking at here that is a little bit concerning is this chart. I mean, of course, we're below that 200-day line. Almost everything right now is below that 200-day line. But but it seems to keep coming down and then rallying to the 50-day and rallying to the 50-day. So this may just be a rally to the 50-day. I would this may be a potential short. I know that sounds hard to believe, but this one may be a potential short here. So I don't know. Good question. Hey Jim, do you think Sony might be a good short? Wow, that's a good question. I haven't dealt with Sony in years, but is it still under Sony SONY? Probably not. Let's see if that comes up. I think it may. Okay, yeah, Sony Group. Okay. Do you think that would be a good short? Well, it does kind of look like you want to see it. It's coming down and then it's rallying to that 50-day, and then when it can't hold the 50, it's coming up and it's rallying. It's making a rally attempt to the 21-day line. That's definitely what's happened here, and then it's rallying to the 10-day line. So basically, this is starting to fall. You're absolutely right. Here's one thing I do have a little bit of concern about. If you look at this, if you look at the 200-day line, it's starting to move over. But what you really want to see when you're looking at a short is you want to see a 200-day line actually sloping down. And let me just show you Shopify for a second to kind of illustrate this. Because let me see if I can pull this up. There we go. This is the one I did short today, Shopify. If you'll notice this 200-day line, you notice how it's starting to move lower. It's starting to slope lower. That is a sign. That is a sign that the capital is moving out of this issue. Also, what you want to see is you want to see this underperformance. You want to see it, basically underperform. Now, right now, Shopify, basically, when Shopify got into trouble, really was back in basically mid-January, and when the 50-day line dove below that 200-day line. You notice how prior to that the 21-day line dove before, and then the 10-day. So basically, what's happening is that it's starting to invert. It's starting to go 200, 50, 21, 10. So that's kind of how. So it's just backwards of a rising stock. A stock that's rising should have the 200-day at the bottom, then the 50, then the 21-day, then the 10-day, and you should be riding above that 10-day. Now, if you notice with this one, Shopify, We are below that 200 day moving average. We're also below the 50-day moving average. We're below the 21-day exponential moving average, and we're below the 10-day moving average. So this is inverted, okay? So what we're looking for is we're looking for it to come down and then rally typically to the 10 or the 21-day line and then lose strength and go down. But in the case with Sony, let's look at that one again. When we're looking at Sony, there we go. We are basically we're right on that 10-day line. So we're definitely inverted 200, 50, 21, and 10. But this line hasn't really started to arc over. Now, when the 200-day moving average starts to really bend lower, that's really where you want to see, well, the tide's flowing out. That's where we want to get into the short. So I think it's a good short, but I definitely think, and I think it's good that you're looking at stocks that have relatively large, large floats. When you're shorting, it's typically better to short the stocks that have a large number of shares and options, to be honest, because it makes it, because and not that much of a short position, because that's where you get the short squeezes. So you want the bigger volume and the bigger stocks typically for short. They typically work better. All right, today earnings on a firm. Let's get a firm. Let's see if I can get the there we go. Okay. Let's pull it back to, there we go. Okay, so with the firm, let's go and take a look to see if we've got the earnings updated yet. I doubt we do, but we'll take a look here. Yeah, okay, so they haven't updated earnings yet. Yeah, there was definitely some selling action coming in here. Yeah, I mean, it did bounce. There was a dead cat bounce on it, 23.59. So we were at 18. It did make it. They must have had pretty good numbers, so they probably did. It is a dead cat bounce, but when you're looking at a chart like this, when it's going, basically down like this, this is just something that either you want to short or you want to stay out of, because it just, it's just really not looking the way it needs to look. So that's kind of a bad thing. Is Shopify going down? Well, today Shopify was moving up, but Shopify has a downward trend, believe it or not. I mean, you think, wow, Shopify is great. It is. I mean, Shopify is great. But, in this kind of environment, it's going to be more difficult for everything. I mean, there's Squarespace, and there's a lot of good companies out there in this, sort of web builder kind of area. I mean, and Shopify is one of the best ones, but it's kind of like Teladoc. I mean, it's a great idea, but there's not very much barriers to entry. And so I think that, and that's true with Netflix too. There's a lot of companies that there's just not a lot of barriers to entry to them. And so even though they have a great idea, they can be really vulnerable. And I think that's definitely the case with Shopify. If you look at this chart, this is the daily chart here for Shopify. Basically, back here in November, we had a price of, believe it or not, $1,782 a share. So almost $1,800 a share. Currently, it's at $356 a share. As you can see, it's lost, basically over 2/3 of its value. This stock has lost over 2/3 of value. And if you look at the relative strength line, you'll see that it is trending lower. Now, it did move up today. That's why I shorted it as it moved up. But if you'll notice, it'll come down and it'll kind of blip up, and then it will go down, blip up, go down, blip up, go down. So that's kind of what's happening with Shopify. I suspect it's going to be a lower price stock. I mean, who knows what's the future is going to be, but it's going to be a lower price stock. I'm pretty sure of it, at least in the future. So that's why I did short it. How's QQQ and Spider looking for tomorrow? Well, it's always hard to predict, but I think the Qs may be still. I mean, everybody thinks that it's going to turn around for the Qs. I'm not so sure. I'm really not so sure. I mean, this is the QQQ right now, the Invesco QQQ that I have up on the screen, George, and looks as if we're just kind of still in this downward trend. I mean, now I did put on a bear put spread here. So, as it moves lower, it should do it. Now the bear put spread basically pays from 290 down. So if this thing goes to 185, then it'll pay all the money for that particular spread. So so it does look like we are definitely looking at I think it is gonna open lower. It made a rally attempt today and it failed. I just think we're going lower. I just get that impression. The spider is starting to get to the point where it may go lower too. And really, the reason I think what's driving a lot of this is there's an entire repricing going on in the market with the higher interest rates that they're using to combat inflation. It's really killing the tech market. And most of the tech market, as you know, is contained in the QQQ, but so the higher the interest rates go, the higher the mortgage rates go, probably the lower the Qs go. And so I think we'll probably see a down day for the Qs tomorrow. With the S&P, this is also starting to turn over. As you can see, we have an inversion of the index lines. What I'm looking at here is that what I'm looking at here is that the 200-day moving average for the spider is starting to move to the downside. Once that starts a downward slope, that's kind of not a good thing. It has been basically an upward trend really until we got to about April. It's treaded water, and now it's starting to make a move down. So my general opinion for the spider is that we're looking to see a lower spider, and we're probably going to see a spider maybe as low as 350. I hope that's not the case, but I'm going to go to the weekly chart here, see if we can look for some resistance here. But as you can see, it's already starting to move down. It lost support, and then boom, it lost support at 400. So I think we're going to see it move down. Part of the problem is that we're getting into the zone where we were at the beginning of the COVID, where we were at the beginning of the COVID thing. So this is the floor, I believe, really for the spider, and it's got a long way to go down. So I'm not that bullish right now on the spider. I think it could easily fall from here. It could easily fall from about here to potentially all the way down there. So we could definitely see it come all the way down to about 340, 350, 340 right there. I think that's very, 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 very possible on the spider. So just not looking terrifically good on that. All right, let's take a look at Tesla. That's a question coming from TikTok, TSLA, of course. Tesla, I'm going to probably be doing a short tomorrow on Tesla. This will probably be a call short. You got to kind of stay tuned. Oh, okay, come on. There we go. This is Tesla right now. Let's go to the daily chart to kind of get a better idea of the action on it. So let's see. Come on. There we go. All right. Here's what, we're on the weekly chart. So we're bringing up that daily chart here in a second. And hopefully we'll get that in just a second here. All right. Okay. Daily chart. There we go. You'll notice how I've drawn a trend line here. Okay. If it falls below this trend line, you see this is a reversal line. Okay. And it was good when it reversed higher, but now it's in a downward trend. And if it reverses below this, which it easily could do, it would have to get down to about 650 It would have to get down to about 650 here. But if it gets down that low, then it's probably going much lower. Much lower. So hopefully, we were down today a little bit on Tesla. After hours, it's bouncing a little bit up after hours, but unfortunately, right now I see a downward trend. I mean, I could easily see this getting supported at 600 or so. So I think we have further to go down on Tesla, and that's kind of unfortunate. I'm going to be doing a bear trade on it tomorrow. Don't normally like to do that with, don't normally like to do that. Okay, Shopify. Yeah, Shopify is splitting 10 for 1. That is true in June. So, we will see Shopify, probably in the $30 range, which would be incredible. But I do think that we're gonna continue to move lower on Shopify. I mean, I think that's just likely. ChargePoint. Okay, let's look at ChargePoint. I don't think ChargePoint's probably doing very well here. CHPT. I think it's CHP ChargePoint. Right, CHPT, CRP or CRPT. I can't remember. Yeah, ChargePoint Holdings. Yeah, it's a $9 stock now. This just shows you kind of how bad things can get. Again, part of the thing about this is that, really when it started to lose its strength, of course, was in September of last year, and that's when the 200-day line started to move lower. So, unfortunately, it did bounce a little bit today, but it's as part of a moving lower. This could easily be a $5 stock in 2 or 3 months. So, I definitely think there's demand for electric charging stations, but this stock may not survive based on what I'm seeing here. So we will see. I did make some money with Blink Charging, which is another one, but I think it's just going to be tough for them. All the way around. Let's look at GIS. Thank you, George. Appreciate it. GIS. And let's see what's happening here. Yeah, General Mills. Well, this is definitely the kind of stocks that this is where the money goes and hides in downtrends. They go to the consumer staples, and it's definitely in a buy zone. In normal times, I'd probably be interested in this, but right now I'm not. It does have a very good relative strength line pointing upwards and a 94 rating. So this is definitely one of the better stocks out there. There's no question about it. The thing about it, though, is that, in this market, I just think it's better to be in cash right now or short. I really don't think it's a good time to be long. Now, I am long. I should need in my own document. I am long one stock, and that's Chevron. CVX. I am long Chevron because I do think that this is the one strength part of the market is the oil sector. Now, what happened is it definitely got support at the 50-day line. This is Chevron here, and it isn't in its consolidation. Now, if it moves, it looks like it's bouncing, it's moving higher. We'll see if that's indeed the case. But currently, this is the only stock that I own long. And if you'll notice, the relative strength is pointing up. That means that it is getting love from people. I do think this is a place where people are going to hide. That's why I'm in this stock. So the same kind of logic probably would work with General Mills. I think Chevron has a more commanding position in the market because they're in the oil business and they're in all levels. They've got refineries and everything else. So. I think still the only real sector of the market that's doing well is the oils. Now the utilities are starting to break down as well. All right. Oh, sorry. GFS. This is Global Foundries. This is a company that I'm very interested in. I definitely think this company has a future. I just don't know if the future's now. That's the problem. We're in such a negative market that I think it's very, very tough. Right now, as you can take a look in the daily chart, we have a downward trend. This is trading below the 50-day line. Now, this was an IPO, so that's why you don't see a 200-day line here. But if you look at it, this is falling kind of in sympathy with the Nasdaq. This line up here, this black line up here, this is the Nasdaq, and as you can see, the Nasdaq has been going down, right? So this stock is going down as well in sympathy with the Nasdaq. So if this was going up with sympathy to the Nasdaq, I'd be much more interested in this. Let's take a look at a company that I do believe is going up relative to that. Let's look at CVX again, and I want to show you this kind of comparison. And I know you're probably tired of this, but if you'll notice, does this have the? Can we see the? Let's go over to the weekly chart. Let's see if we can see that 50-day. Yeah, there. Okay, so this is the Nasdaq. Okay, this is the Nasdaq. You'll notice part of the reason I like Chevron is because Chevron is gaining against the Nasdaq. So as the Nasdaq is moving down, this stock is moving up. So this is actually beating the Nasdaq. Now, of course, the Nasdaq is basically going down. That's where the techs are. So that's the reason, part of the reason why, just doing this analysis, that I'm not as interested in GlobalFoundries. Now, I like GlobalFoundries as a company. I think it's a great company, but I don't think this is a good time to buy it because the entire the entire tech sector, unfortunately, is under assault, and of course, that's represented in the Nasdaq 100 or the QQQ. So this is EVgo. And thank you very much for this. This is a good stock. But again, the problem here is that we have this downward trend. And this is really not so much the stock as it is the area of the market that it's in. There's just a disinvestment right now out of the Nasdaq. What's happening is many of the funds are getting the retail investors. They're pumping them up. They're putting out Kramer saying buy. Kramer's saying buy, buy, buy. They always do this. And then they're drawing in. They're saying buy in the dips. That's a great thing to do. That's what I would do. And what happens is, of course, is people buy in the dips, and that's when the big funds sell. So I think that this is a watch list stock at the very best. I wouldn't be an owner right here, just because it just isn't looking really good, unfortunately. Rent-A-Center, RAC. This is another one of the favorite. I think this is Rent-A-Center, if I'm not mistaken. I think it's RCII though. Let me see, RAC. See if that will work on my magic chart software. RAC. Let's look. And yeah, I think we want RCII. I think that's their symbol. This is a good counter-cyclical down market stock, Rent-A-Center. And I think this is what you're talking about. This is starting to make a turn, and it's moving above the it's definitely moved above the 200-day line. But here's the problem. This is the kind of stock that I like in these markets, but it's still in a downward trend. I mean, I don't think I would buy it here. I don't know if it's turned yet, but Rent-A-Center is definitely the kind of stocks that I like. But here's the problem with this one, and I wouldn't buy it. Why? Because that 200-day moving average is moving lower. So even though the stock is improving on the Nasdaq, this is the Nasdaq line here, overall money is flowing out of this stock. So I just wouldn't be a buyer of Rent-A-Center. I mean, I'm really not a buyer right now of anything. I want to see a bottom be put in. I don't think we're there yet. I think we're easily going lower. Can we short Coin? Well, Coinbase might be a good short. I haven't been in this since the first day of the IPO. I was in it for basically a few hours, and then I sold it out the first day. But I bought it as it opened, and then I sold it out the first day. It's 61. This one definitely could go a lot lower. They've been warning, and I think I put out some videos on this. Rent-A-Center has been warning about, Coinbase has been warning if you have crypto and they go bankrupt, and the company goes bankrupt, the bankruptcy court can seize the assets, and then if you own crypto, you become a creditor of the bankruptcy estate. And then when you do that, and then believe me, this is not fun, when you become a creditor of the bankruptcy estate, they negotiate, and then you could possibly get cents on the dollar. So this one might be a good short. The biggest issue that I have though, in shorting something that's really on the way possibly to bankruptcy, is that if they do go to bankruptcy and the stock is delisted, because it's equity, you lose any claim at all on the estate. So I'd be kind of worried about this one. I typically don't like to short stocks that have a potential for bankruptcy, because what I want a relatively strong stock that's starting on hard times. That's one of the reasons why I shorted Netflix, because Netflix I think is going to survive. I just don't think it's going to be as strong as it was, and that makes for potentially a better short than a company like Coin, which literally could go bankrupt, and then it becomes really a mess. Now, really, kind of the reason why we just have to be super careful is Apple, which it was up until yesterday the most valuable company in the world, became the second most valuable company after Saudi Aramco. So Saudi Aramco actually overtook, in terms of total capitalization, Apple. And part of the reason this is showing us that the market for tech stocks is moving lower, and for resources, Saudi Aramco, of course, is the largest oil company in the world. It's basically 90% owned by the Saudi royal family. I mean, the 10% I think is the float. It's not a big float. Apple is bouncing up after hours, but as you can see, we still have some hope here, because the 200-day moving average hasn't really turned lower. It's still going up, so that is a good sign for the future. I think it could get some support here, but right now we have a real issue. The S&P 500, the Nasdaq composite is moving down, and so is Apple. Why? Because Apple is such a big portion of the basically the Nasdaq. It's such a big component, so you can see it's going to run in sympathy typically with the Nasdaq. So if the Nasdaq is having difficulty and going down, it's almost assured that Apple would as well, because Apple makes up an incredibly large portion of the Nasdaq. Well, I have kind of gone through a bunch of stuff. I hope everyone out there is doing well. Here is my advice, and I don't know if it's for what it's worth, but if you are down more than 7% on anything, it's a good idea to sell it, or at least reduce your position here, because in these drawdowns, and we're definitely in a period of drawdowns, the most important thing is not to make money, it's to preserve capital. So be very, 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 very leery about losing capital here. So if you're down more than 7% on any of the on anything, it's a good idea to cut your losses as quickly as you possibly can, and then just wait for a better period, a basing period, and build that watch list. Right now, I'm basically over 90% in cash. The rest I'm pretty much short. I'm taking short positions, and so that's kind of how I'm dealing with it. I think we have another leg down, unfortunately, in the market. So I think in the summer it's going to be very tough. And I think that the shorts probably will make money, but I don't think everyone else is really going to make money, at least until we get a turn. Right now, again, we're 4 days away from a follow-through day, but right now we don't have that follow-through day, and I think that we're going lower. So I think we're going to take another leg down. We're currently basically sort of where, when the COVID thing started, we're sort of at that level, and we could go down all the way. We could now feel the pain all the way down again. So be very careful, stay in cash, and be very selective on what you short. I don't think it's a good time to be long anything. I mean, I'm only long one stock, and that's Chevron. I'm not saying Chevron's the greatest thing in the world, but, it's one of the, it's sort of a dividend aristocrat. And it's one of the, I'm just doing it to make sure that I have something in the market. The rest of things, I think it's got to be short. I think you got to be in cash. And I think actually cash is one of the best assets right now going forward. I know everyone's going to tell you out there, they're going to say, oh, inflation, cash is a terrible investment. Actually, I think cash right now is one of the best investments that you can have, because there will come a time, and it won't be long, when cash will be king and everything will be on sale, but it's not happening yet. We've got to wait. We've got to wait until there's a base. I think that part of the Nasdaq stocks could go down another, they could lose another 30, 40%. And the companies, a lot of these companies won't go out of business, but they will base. And then when it bases, that's when you want to buy it. So we're a long way from that now. So thank you, everybody, for taking a look at the show. If you're not already a member of the Action Trade Alert, it's very easy to do. Just go to www.Dallas Trading Floor, and it's easy sign up there. I will be back tomorrow at 5. Hopefully, we have one more question. Let's take a look. Oops, come on. I'm having bandwidth issues. Oops. Twitter. I don't know about Twitter. I'm probably not gonna, I probably would say stay away. It's too political. I think that, stay away from Twitter. I think that's probably your best bet right now. So until tomorrow, everybody, happy trading. Oh, by the way, I just wanted to mention, and this really helps me out, get out there to a lot of people, and that is, if you could like it, if you could hit that like button, boy, that would be great. And do consider subscribing to the YouTube channel. Also, hopefully we're going to get that. We're going to show that. No. Okay. Well, there we go. We want to, please like this, and that really helps us out a lot. It helps us get out to a lot of people. So until tomorrow, everybody, happy trading, and be careful. Stay in cash. Build your watch list, and get ready, because this will bottom, and then when it bottoms, that's when we're going to buy. So, see you.